We're too small for a CFO. My business is simple. I have a bookkeeper and a CPA. We're covered. I hear this all the time. And on paper, yeah, that sounds responsible. It sounds like everything is being taken care of. But here's the thing. What I've learned over 2 decades of reviewing financials is that coverage and clarity are two different things. That's exactly what one multi-six-figure partnership believed before I started working with them. They were generating well over 200,000 in revenue. They had an operations person handling the bookkeeping and a CPA filing their tax returns. So from the outside, everything looked handled. Nothing appeared broken. Didn't even look messy. And one of the partners suggested bringing me in for financial oversight. And the response from the internal team was, our financials are simple. We don't need a CFO. They weren't being defensive. They weren't being dismissive. They just didn't know what they didn't know. But one of the partners wasn't entirely comfortable. In a private conversation, he admitted something quietly to me. They had been in business for a couple of years, and at that point, he had never really reviewed a profit and loss statement. And even if he had, he wouldn't have known what he was looking at. That's actually more common than people realize. Most business owners step into a CEO role with no formal training how to read financials. They're expected just to figure it out. So eventually they hire a bookkeeper and a CPA, and they assume it's all handled. There is an unspoken assumption in a lot of businesses. Bookkeeper plus CPA equals covered. I hear this all the time. The bookkeeping is being maintained, the tax return is being filed, so everything must be fine. But filing a tax return isn't the same thing as financial oversight. Submitting your numbers to the IRS is not the same thing as evaluating those numbers to see if they're accurate, aligned, and strategically useful. In this case, the CPA was doing exactly what most CPAs do, taking the information provided and entering it into the tax software, filing the return. And the bookkeeper, she was capable, very hardworking, but no one was stepping back to look at the entire financial picture. No one was asking, is this categorized correctly? Does the reporting actually reflect the business and how it operates? Are these numbers helping us make better decisions? And that's the difference. In my first financial review, I identified a misclassified expense that was flowing directly into their tax return incorrectly. It wasn't fraud or negligence. It was simply a categorization that had been repeated year after year without being questioned by anyone. But the way it was being reported was a clear audit trigger. And that was just the beginning. As I continued reviewing, it became clear that several areas of their financial reporting didn't fully align of how the business was actually operating. Expenses, they weren't clearly categorized. Revenue wasn't consistently tied back to their bank accounts. And sales wasn't being detailed in a way that gave them a clear picture of where the revenue was coming from. And cash flow wasn't really understood. The numbers were technically complete, but they weren't providing the level of clarity to confidently make growth decisions. The issue wasn't complexity. The issue was clarity. So as we realigned their chart of accounts and corrected the classifications and rebuilt their reporting structure, something shifted. For the first time, they clearly understood what needed to change in order to become more profitable. Everyone was aligned: sales, marketing, operations, and they all understood the cash flow. And decision making became more deliberate, and spending tightened where it needed to. And not because someone told them to cut back, but because they finally had the clarity they needed. Opportunities became easier to evaluate. They weren't second guessing anymore. They were looking at reliable data. And that year, their profit increased by 156%. And it became their first truly profitable year since launching their business. Not because we uncovered something dramatic, but because clarity changes behavior. After working with them, I realized something. This wasn't unique to them. I've seen this same situation play out in businesses that are generating over 200,000 a year all the time. I've also seen it in 7-figure and even 8-figure organizations. It's not about revenue size. It's about whether anyone is actually reviewing the financial information with structure and intention. Most teams are working hard. The bookkeeper is doing their job. The CPA is doing their job. But no one is stepping back and asking, do these numbers actually tell us what we need to know? I stepped away from doing tax preparation many years ago. I wanted to be available for conversations around profit and cash flow and growth. And the bonus is, I still understand the tax returns inside and out. I know what shouldn't be there. I know what numbers need to be categorized for the IRS. And I also know how detailed they need to be for business owners to make confident decisions. That's the bridge most businesses are missing. So I created a simple checklist that helps you see if there's anything that might be off, anything that hasn't been questioned, anything that deserves a second look. And if you're watching this and thinking, I'm not actually sure, that's exactly who I created it for. If you already have a bookkeeper and a CPA, that's great. This isn't about replacing anyone. It's simply about gaining clarity. If you'd like the checklist, just comment checklist below or send me a message and I'll send it right over to you.